Here's a detailed summary of Novo Nordisk's Q4 2025 earnings call. Overall performance and strategic highlights. Novo Nordisk achieved 10% sales growth and 6% operating profit growth in 2025, marking the conclusion of their 2019 strategic aspirations. The company has more than doubled sales and operating profit since 2019, with a significant surge in obesity care sales from DKK 6 billion to DKK 82 billion. They've expanded their reach to an additional 16 million people with their diabetes and obesity treatments, now treating nearly 46 million. Key R&D milestones include the Phase 2 readout of zenagamtide and Phase 3 readout for CagriSema. The FDA approval of the Wegovy pill by late 2025 and submission of CagriSema in the U.S. are significant achievements. Financial metrics. Full year 2025 revenue growth, 10% at constant exchange rates. Operating profit growth, 6% at constant exchange rates. Gross margin, decreased to 81% from 84.7% in 2024. This was impacted by amortization and depreciation from the Catalent manufacturing site acquisition and restructuring costs. Operating profit, reported decreased by 1% in Danish kroner due to significant restructuring costs, around DKK 8 billion. Excluding these costs, operating profit would have increased by 6% in Danish kroner and 13% at constant exchange rates. Net profit, DKK 102 billion. Cash from operations, nearly DKK 120 billion. Capital deployment, DKK 60 billion towards manufacturing capacity expansion and DKK 30 billion for R&D pipeline expansion. Shareholder returns, over DKK 300 billion returned since 2019, with DKK 52 billion in dividends in 2025. A final dividend of DKK 7.95 is proposed, totaling DKK 11.70 for 2025. Marking 30 consecutive years of dividend per share increases. A new DKK 15 billion share repurchase program has been approved. Segment performance, 2025 GLP-1 diabetes sales, increased by 6%, US plus 5%, international plus 7%. Insulin sales, decreased by 1%, US plus 2%, international minus 2% due to market share losses. Obesity care sales, increased by 31%, US plus 15%, international plus 73%, primarily driven by Wegovy. Rare disease sales, increased by 9%, US plus 7%, international plus 10%, mainly due to Sogroya launch uptake. International operations, GLP-1 volume growth of 44%, maintaining a 62% GLP-1 volume market share. Wegovy sales reached DKK 28 billion, growing 134%, with launches in 35 new countries. U.S. operations, GLP-1 diabetes sales increased by 5%, driven by Ozempic uptake. Wegovy sales increased by 16%, driven by volume. Key product updates and developments. Wegovy pill received FDA approval and launched on January 5, 2026. Early uptake is encouraging, with over 50,000 prescriptions in its first week, more than double any prior anti-obesity drug launch. Commercial access is progressing, covering just under half of lives covered by injectable Wegovy. The company feels confident in supply for the U.S. market. Ozempic, weekly prescriptions are around 610,000. The updated formulation of the Ozempic pill, formerly Rybelsus, received FDA approval. CagriSema, Phase 3 Reimagine 2 trial for type 2 diabetes showed superior A1C reduction, 1.91 pp versus 1.76 pp for semaglutide, and significant weight loss, 14.2%. Regulatory submission in the U.S. was completed in December. Zenagamtide, formerly amycretin phase 2 results showed significant A1C reductions, up to 1.8 pp for subcutaneous, 1.5 pp for oral, in type 2 diabetes. Phase 3 programs, Ambition for Diabetes, Amaze for Obesity, are planned for 2026. Adavopavat, Phase 3 Hibiscus trial for sickle cell disease readout expected in Q2 2026. Denosumab, formerly MEM8 regulatory decisions in the US and EU expected in the latter half of 2026. Semaglutide 7.2 mg, submitted to FDA under CNPV pilot program. Decision anticipated in Q1 2026. Launched immediately upon approval. Ziltivekimab, first readout from ZEUS Phase 3 trial expected later in 2026 for MACE risk reduction in atherosclerotic cardiovascular disease and CKD. Management's forecasts for future quarters. 2026 guidance outlook. 2026 is expected to present pricing headwinds. Novo Nordisk will report adjusted sales and adjusted operating profit growth at constant exchange rates to exclude exceptional and non-recurring effects. Adjusted sales growth, 2026 -5% to -13% at constant exchange rates. This reflects international operations growth and U.S. operations sales decline. Factors include lower realized prices, including most favored nation agreements, loss of exclusivity for semaglutide in some international markets, and a lack of reoccurrence of U.S. gross-to-net adjustments from 2025. Adjusted operating profit growth, 2026 -5% to -13% at constant exchange rates. This is driven by the sales growth outlook and targeted investments in R&D and commercial areas. Free cash flow, 2026 expected to be DKK 35 billion to DKK 45 billion. Capital expenditure, 2026 expected to be around DKK 55 billion, with a declining trend in subsequent years. Significant risk factors, pricing headwinds, particularly in the U.S. due to most favored nation agreements and potential reductions in payer coverage. Competition, intensifying competition in both diabetes and obesity markets. Generic competition, loss of exclusivity for semaglutide in certain international markets, impacting sales. Regulatory approvals, delays or rejections of new drug applications. Supply chain, while confidence is expressed, the rapid uptake of the Wegovy pill raises potential supply concerns if demand persists at high levels. Market dynamics. The obesity market is described as highly dynamic and volatile, with uncertainties around volume uplift and channel mix, especially for self-pay and new product launches. Highlights: strong overall sales and operating profit growth in 2025, exceeding previous strategic aspirations. Massive growth in obesity care sales and patient reach. Successful FDA approval and launch of the Wegovy pill, demonstrating strong initial uptake. Positive Phase 2 and 3 readouts for key pipeline assets like CagriSema and zenagamtide. Continued commitment to shareholder returns with increasing dividends and a new share repurchase program. Confident outlook on Wegovy pill supply. Positive progress on commercial access for the Wegovy pill. Encouraging early signs of volume response to lower prices. Lowlights: projected negative sales and operating profit growth for 2026, primarily driven by pricing pressures and the U.S. market. Decreased gross margin in 2025 due to integration costs and restructuring. Significant restructuring costs impacted reported operating profit in 2025. Uncertainty in the dynamic obesity market regarding volume uplift, offsetting price declines. Certain states dropping Medicaid coverage for anti-obesity medications. Most important statements from CEO and CFO. CEO, Mike Dowstar. In 2025, Novo Nordisk delivered 10% sales growth and operating profit growth of 6%. We sharpened our strategic focus in 2025, doubling down in our core therapeutic areas of obesity and diabetes. Most importantly, we have increased our reach by an additional 16 million people with our obesity and diabetes treatments. By late 2025, we received FDA approval for the Wegovy pill, the first oral GLP-1 for obesity, and submitted CagriSema in the U.S. We are treating nearly 46 million people with our innovative medicines, reflecting Novo Nordisk's commitment to innovation and the ongoing efforts to expand access to our therapies worldwide. Price reduction in some ways is our investment for the future, and for capturing more patients, we are ready to do that. And I believe much stronger than with affordable prices, we can get to those higher volumes faster. 2026 will be basically a year where we will face some headwinds, especially on the back of the price declines, and we have shown that in our guidance today. CFO Karsten Munk-Knudsen. In 2025, our sales grew by 10% at constant exchange rates. The gross margin decreased to 81% compared to 84.7% in 2024. The decrease in gross margin is impacted by amortization and depreciation related to the acquisition of the 3 Catalent manufacturing sites, as well as one-off restructuring costs. Operating profit decreased by 1% in Danish kroner and increased by 6% at constant exchange rates, reflecting higher sales and distribution costs. The main impact on operating profit was, however, the company-wide restructuring cost of around DKK 8 billion. For 2026, adjusted sales growth is expected to be -5% to -13% at constant exchange rates. The outlook reflects expectations for sales growth within international operations and expectations for sales decline within U.S. operations. Adjusted operating profit growth is expected to be -5% to -13% at constant exchange rates. The guidance we are issuing now reflects the current run rate we are observing in the market based on Q4 performance and relevant events, expectations, and assumptions about the future. The uncertainty lies in the self-pay channel, particularly with price elasticity, which we are still assessing. The obesity self-pay segment is very dynamic,